Welcome to TOOP TV's newest segment, Fireside Chat. The original Fireside Chat was a regular radio show used by presidents to inform the public of the latest issues. It originated in 1933 and ran until 1944. But now the Fireside Chat is back and we're using it to tell you about the latest real estate issues. It's uninterrupted interviews with the experts in the know. So sit back, relax and enjoy Fireside Chat.
Welcome to Fireside Chat, and today we talk to Cameron Kusher, who is from RP Data, who are the suppliers of information to the Reserve Bank, and your interest rates, the decisions are made on the basis of information supplied by RP Data. So these are very important people that we're dealing with here. So Cameron, welcome.
Thanks for having me, Anthony.
Just a bit of background about yourself.
I work for RP Data. I'm based in Brisbane, but we comment on the national residential property market. So have a very keen interest on all markets, and particularly the capital cities. So property investment's one of my loves. So very passionate about it, and love researching and talking about it.
Cameron, we're here in South Australia, and you're flowing down especially for TOOP TV, I guess.
That's right. That's exactly right.
Not exactly, but good to see you down here. Apart from the weather being a lot warmer up there, what's the market like? Is it warm or hot here?
Here we're looking at a market which is fairly, it's not overperforming, it's not really underperforming. It's slightly underperforming what we're seeing nationally. We look at markets like Perth and Brisbane, they're really quite badly underperforming what we're seeing nationally. And the Melbourne market and the markets like Darwin and Canberra have really been significantly outperforming what we've been seeing nationally. So Adelaide always kind of has been and continues to be the steady performer. Not spectacular, but not bad either.
Great. Now, there's the slides that we've got here, the strong market conditions are a thing of the past. Explain to me about that.
What we've found over the last couple of months is the rate of property value growth nationally has really been slowing. During June, we saw that property values actually fell by 1.1% for the month. And then during July, we've seen that there's been growth of 0.1% for property values. So what we're seeing month to month now is some months property value grows up, other months it's down. And we're expecting that for the remainder of this year, it's going to be fairly flat market conditions with not too much growth and probably not any significant falls in property values.
So basically very much steady as she goes.
Exactly right. Unfortunately for the spring selling season, what we've been seeing nationally is that there hasn't been a lot of ramping up of activity. So we're expecting that spring this year is not going to be quite as strong as it was last year, but certainly not as bad as the conditions we saw back in 2008.
Now Adelaide underperforming most recently, but had actually been outperforming the nation. So where are we at now? We're sort of just getting into a nice cruisy part of the market where we're just very consistent.
Over the last 12 months, we've seen that Adelaide property values have increased by about 8.5%, and nationally we've seen property values up around 9.7%. So Adelaide's slightly underperforming, but certainly not as badly underperforming as we've seen in markets like Brisbane and Perth, and obviously not doing as well as we've seen in Melbourne and even Sydney and some of those markets. What we have found though is that over the last say 15, 20 years, we've seen that when we take the national level of property price growth on an annual basis and we look at the markets which have overperformed, when a market's overperformed during 2 consecutive periods, it's historically then underperformed in the next little bit. So what we saw back in 1997 was that Sydney overperformed the national rate of growth. We then saw that Sydney overperformed again back in 2001 to 2003. And then we all know what happened in Sydney, no growth for 5-6 years.
That's right, yeah. This
has got me a little bit concerned about the Melbourne market. The Melbourne market significantly outperformed the national market in 2007 and has done so again over the last 15 odd months. It's got me a little bit worried about Melbourne prices. What we've seen with Adelaide is that the market outperformed in Adelaide during 2007 and also outperformed back in 2001 to 2003. So over the last 12, 18 months, we've seen that Adelaide has slightly underperformed the national rate of growth. So, probably next time we start seeing some strong growth nationally, Adelaide will start to perform well again.
Now we're talking about prices, but we haven't actually talked about volumes and the number of people that are actually moving. What are the volumes like? How many people are actually moving compared to what you consider whatever is the norm?
We saw with volumes that they haven't returned to the levels we saw prior to the global financial crisis. They're about 12% lower than they were back in those times, and they're about 17% lower than they were back in the peak in market activity, which was recorded in 2001 to 2003. But overall, Adelaide volumes and the number of transactions happening across the city have held up quite well. We haven't seen the huge falls in volumes during 2008 that we saw in markets like Brisbane and Perth. And we haven't seen, even in the most recent couple of months, a downturn in volumes. It's fairly steady at the moment, but still below those 2007 levels and those 2001 to 2003 levels.
And what about the stock levels, the amount of properties that are on the market versus the amount of transactions? Is there any change in that area?
What we've been seeing nationally is that the level of stock's actually been starting to mount. As we've seen property values start to slow, the growth in property values start to slow, we've seen that the number of listings has been mounting. People have been bringing more new listings onto the market, and the listings that were already there are taking longer to move off the market. So we've seen a bit of a mounting in stock. But in Adelaide, that really hasn't happened. The number of new listings has been fairly flat since about February this year.
Yeah, that's right.
And the number of total listings has been relatively flat as well. So it shows that most of that new stock coming onto the market is actually being consumed. So we're not seeing mounting levels of listings, which is fairly encouraging given that we're seeing the rate of property price growth slow. We're not seeing that listings are mounting. So we're not threatened with a sort of immediate oversupply of stock available on the market.
Cameron, last year, the spring season didn't see any increase in levels of stock, which in my 30 years is the first time I've seen that. Do you think that's because people are uncertain and there's less property coming on the market and that's actually holding the prices up? And we're really unsure what will happen this spring because normally it's very predictable. We go from 1,400 open inspections advertised to 2,800 in the middle of the peak season. Any thoughts on stock levels and whether this spring will be, such as last, or?
It's actually quite an interesting question because nationally we've found that prior to this spring, pre-listing activity really hasn't been ramping up from real estate agents. So on a national basis, we're predicting that this spring's probably going to be a lot quieter than it was last spring. However, in Adelaide, what we're finding is there actually has been an increase in pre-listing activity leading into spring, and it's one of the only capital city markets where we've really been seeing that. So Adelaide's probably poised for a bit better spring than we'll see in most of the other capital cities, and hopefully it'll be a better performance this year than it was last year.
Yeah. Now, there's this particular slide on the differences in performance across Adelaide Metro itself. Anything that you'd like to point out about the strongest part of the Adelaide market?
The strongest part of the Adelaide market over the last 12 months has really been those areas closer to the city. So the inner south, the inner east and the inner northeast have been the markets that have been doing quite well. The outer more affordable suburbs haven't really been seeing those strong levels of price growth. So it's just highlighting once again the value of being in a good location, close to the city, close to public transport, close to amenity. People are paying to be in those areas and there's strong desirability to stay in those areas. And as a result, we're seeing stronger price growth in those regions.
Now, Cameron, I noticed that Unley, Norwood, Payneham St Peters Council, Holdfast Bay and Walkerville, again the top achievers in the performance of pricing. That seems to be just history repeating itself.
Exactly, and this is what we really think going forward. As cities continue to grow, populations continue to increase and the urban sprawl continues, we think that those areas closer to the city, closer to the amenities, are the ones that are going to hold their value the best and have the strongest prospects for price growth because it's where people want to be, it's where they've got all the facilities and everything they could possibly need, and people will continue to pay a premium to be in those markets. So as property price growth slows over the remainder of this year, we feel that those markets are probably best positioned to continue to perform well.